Okay, I'm going to do this right. So if you are joining me for this video, this is going to be a video that I make to talk about AMC on the brief. I'm going to try to make sure it's short to the point. And yesterday I did a video on AMC, and it was about an hour of explanation, and I redid my charts today in order to make a shorter version of it. So I want to do like a shorter, hey, how's it going, guys? I wanted to do like a shorter overview. I think it's a simpler explanation, and I think it will help, hopefully, clear some things up about what I think could happen, and what we have to look at on the big picture when these things take place. So I'm gonna do my best to outline the reasons why I think certain things are more likely than others, but I don't want to pigeonhole myself either. And so you're going to hear me say a lot of if-then statements, but it's fairly straightforward. It actually may seem very convoluted to some, but it's actually very, very straightforward. So I'm not going to talk about what an iteration is and like what those things mean necessarily. I'm going to, again, keep it really brief. So I just want to do that overview first, and then we'll kind of jump into other things. I know Tesla has their earnings today. So first, I just want to talk about, there's an interesting chart that was appearing on our Discord group. I thought it was a really simple, straightforward way of understanding the 2020 comparison. They both hit double bottoms, and then it takes off. So it's like, well, once you get to the bottom here, it's just going to take off, right? And I've been talking a lot about AMC as a kind of a model of wave formation, and how there's been a consistency in that whenever we take off, we do see this kind of nosedive for volume, and specifically in the case of a spring. And though it's possible to enter a spring right now, and I'll get to that in a minute, and just kind of go down into a spring, it makes very little sense because OBV has stayed really high and elevated. And I'm going to demonstrate why I think what the purpose of a spring would be in this case, which is ultimately, I think, to get us back to, and I don't know where my line disappeared, but there it is, which is ultimately to get us back to this level, which has been used very religiously to set up this whole downward transition. And it was done the same way in 2020. Okay, I'm going to make that argument and show you what I mean and why I think we haven't really actually created that motion yet, and what it should be, because a spring would be very, very heavy volume, like extremely heavy volume. Now you might say, well, I remember the spring from 2020 and it only moved like a penny below the floor, and it didn't really have that heavy volume on that day or that candle. And you're right, it doesn't. But if you look at the hike in volume that it comes the 1 or 2 months before the spring, there's this massive influx of volume. And it has to do with the idea of going up before you go down, this concept of a spring where you're always going up for liquidity before you go down. Now, this has happened multiple times here, and certainly we could argue that, well, it's already gone up back for sellers multiple times. I'm not going to do that today. I'm not going to fight every single critique that you may have. So if you're looking for that, that's not what I'm going to do. I'm just going to outline why I think what I think, and then we're going to move on, okay? And we'll do some other stuff today, so before the close. So I'm going to try to keep this really brief. So when we come down into this bottom, I'm thinking of things in terms of iteration, which is copies within itself. So I think the first iteration here is the largest, which is the full picture of AMC, okay? The gigantic macro picture of AMC has this kind of huge pattern. Now, you're going to have to ignore the on-balance volume to some degree because it's hard to read here. You really can't read it. But essentially, like this whole picture right here, right? I'm saying that this is all iterative, and it's basically just doing the same thing again, but on a smaller scale here in this like localized time frame. Now, I can't easily go through this process and like demonstrate it perfectly. But I would say that on the whole, you could just take a bars pattern and just sort of copy paste it. And you can sort of observe that moderate pattern that I have. I talked about this yesterday. Again, not going to go into like as much detail. I wanted to try to keep it brief. And I was like thinking about that video yesterday. I was like, it really wasn't that brief. This is what I think is ultimately like the pattern that AMC plays out. Sometimes it goes low here on the bottom, and sometimes it doesn't. Sometimes it goes higher. We haven't ever reached what I call the right side here. It hasn't happened yet. All we've done is a bunch of left side nonsense, which is this part, okay? So this is what I think the whole picture looks like. This is part of the reason why I think eventually, if we look at this, I think we're going to end up back here because this is a macro wave cross down, and then we're going to pull back up, not because what goes down must come up, but because of what it represents, right, on the big picture, which is ultimately like a retest of this LSPY zone, which we have not retested, and then probably, again, going backwards even further, looking at that entire zone as all the way up to about $70 is where this is now, and you can see how there's like 1, 2, 3 flat zones right in the center here, and this is really the area that AMC needs to go back and test, and we haven't done that, even if you use a shift chart, okay? But that's where kind of this argument comes from, is a macro wave formation. I measured it out over a year ago and found that it was probably going to be like a 2 years break here because you had a really long wave down, and this is essentially like an accumulation that pumps back up in order to distribute high. I already have on the value on the chart here the shift values. So again, briefly, that comes from a calculation I did back in December. And essentially what I'm arguing is that if you look at the valuation of the chart, this is actually where the valuation resides in relationship to where we were in 2020. It is not to be confused with, oh, this is where we really are. We're really valued at $6. That's not true, because if you say that, you're basically just, multiplying the stock by 3. That's not actually what I'm talking about here. I'm talking about a ratio. So in relationship to 2020, this is a more accurate representation. So if 2020 is $10, right, then we are where we are right now, right? But if you take it back to where it's the $2 mark, $2.92, those areas from back in 2021, this is actually a more accurate representation, in my opinion, of what that valuation comparison would be. And I've made that argument for the last, I don't know, again, 5 or so months, maybe longer. And this is where I think we're ultimately trading right now. And I think the big picture here is, again, that you're actually kind of chopping right beneath the floor that you were previously, okay? I'm not going to go into any crazy further detail about that. That's what it is. I got 0.2636. It works very, very well. And I've done way too much effort to try to kind of back that up at this point. So if you don't believe me, you don't believe me. That's fine. But I've done a huge amount of investigation, and it just works. It equals the shift value that took place here. Everything lines up where it needs to line up when you use those shift values. If you don't use them, it still works. It's just certain things don't line up as well, and then you kind of have to fill in the blanks. So anyways, so this is what I'm looking at. I'm looking at 2 things. So one, I'm looking at the on-balance volume, and 2, I'm going to look at RSI, and then I'm going to look at the overall picture here. So from an iteration perspective, this is a sell down. There's a big buyback up. There's actually, on this bottom drop here, there's actually a really simple walk down that's got the cat ears that we expect, like the 1-2 walk down. What's not so simple is like targeting that top. And I've talked about this before, but if you go back and you look at the top that was marked up at 1190, it comes from a cross section of where this gap was created back in September, and then also this bull ramp that we abandoned. And that's very important because the cat ears, in the way that I do the analysis, if you haven't been tuned in for a long time, you would be a little lost. But the way that the analysis works now is that largely those are used in tandem with what I call a cross, which is where there's a support and then a subsequent breakdown on a trend to identify trajectory, because it's very accurate and works very well when you use the sine waves correctly in their time zones. So this actually does triangulate it very well. So presently, we are triangulating right now the same thing on the smaller picture. So this is a smaller iteration. So here's where you would call this like the Judge-Zern decision, okay? It's essentially like a really fancy LSPY that almost goes all the way up to a UTAD, goes very high, right? But that's all within the previous range. It never fully breaks the range. I mean, if the range is at 410, then it only really broke it back here in October, you know, and if the range is up here at 430, then it just started breaking it again in October. So this is ultimately like a really bizarre LSPY, and it is bizarre because it jumps back up over the creek and then rides all the way back to the top of the range, which is highly unusual for this kind of a motion. It looked like a change of character, had a double bottom, and it did. It fell through on that, followed through on that rather, and had a 1, 2, 3, 4, 5 wave up to get to that high mark, and then it's coming back down. So if I were to say this is the equivalent of something, again, looking at this as a singular type of iteration of some kind of a model, I'd say this is like the main push-up. This is essentially your platform, and then all you're doing right now is a new walk down. You've restarted it, okay? And so that platform correlates to the platform that we made over here. And I think when you zoom out and you look at the two together, you can see there's some pretty stark similarities between this particular pump up, the flattening, and then the drop, this particular pump up, the flattening, and then the drop. Again, I'm not gonna go crazy and just try to like defend that for an hour or something. That'd be ridiculous. I've done enough of that, so I'm not gonna do that. I'm just going to kind of outline what I'm seeing. So basically what I'm arguing is that there's a OBV target line, and that ultimately this hasn't been messed with since May. And the OBV has been extremely high. The on-balance volume has been extremely high, and it needs to come down to 10.83 million. I'm going to stick with that one now because I think that it's correct. You could argue that maybe it doesn't need to go that high, that low. It could be more like 25, and I'm using the 4-hour chart, but I'm going to stick to this one because I think this is the one that matters the most. I also have some good news for you today, which is that I don't necessarily think this has to go down as low as we thought it did. If it does go down there, does it still work? Yes, it does. It doesn't make a real big difference. It still works. But if it doesn't, and it makes the shallower spring, as long as the on-balance volume hits that mark, we're totally good. Like, it will work out. Because technically in 2020, this same on-balance target line never hit. It never hit again. It does come back down and do this and fulfills it in 2020. It does not do it on the price action though. So that's kind of interesting. So even if you had that target and you were like really sure of it back in 2020, the comparison would be like back then someone could have had the same target, like using the same method that I'm using, they could have had a much lower target for a spring and it would have looked really correct. But the truth was, as soon as it got down there, the on-balance volume was already low enough. It doesn't keep going on the price action. Once the on-balance volume hits the target, it's done. So the spring ends up only being like a penny, right? But that's all they needed, and that's fine. So the operators don't need to go down any further. That's okay. That's good news if you're kind of dreading having to go down and possibly below 2, because it could mean that that doesn't happen. I say could. I'm not positive because I don't know yet, and we don't know yet, but it could mean that doesn't even get down that far, right? So this comparison right here is going to be put side by side with the comparison for the and what I might have to do is kind of flip back and forth, but I did take a screenshot to make it a little bit more digestible today. So I'm going to get that screenshot for us. I had to make sure I have the right one. I think this is the one. Yeah. So what we're going to do is, again, I'm probably going to have to flip back and forth like a little bit on this. So I'm going to kind of spread these windows out. I'd love for them to be perfectly side by side, but because I took a screenshot and I'm not using like a live chart, I can't scale it that way. All right, but you can see the comparison regardless, and I will try to sort of scale it somewhat the same so you can see what I'm talking about here. All right. So the relationships that we're talking about are the relationships between the drop down, right, the OBV, which is on balance volume, and then what ultimately happens later in a potential spring action. All right. So again, not going to be able to kind of get this perfect on the chart, but I will do my best so you can see it. So when we went up in December, I had actually thought for a moment that we might be in this kind of final motion. And it has a lot to do with the waves that are present. There's some very steep waves in our current time frame, and that's all good. However, if you look at it now, you can clearly see, like, I'm not making that argument. In fact, I'm saying that I don't even think we've actually done this guy yet, which sounds a little crazy because you're like, well, that's a lot, right? It means you have to pump all the way back up to 4 before you can come down lower. And yes, that's the truth. That's what I think, okay? Back in 2020, when the ledge was created in March before the COVID drop, there's a very solid, stable, on-balance volume location. That location, when it breaks back to the upside, there's an incredible hike in volume after that bottom. And a lot of folks won't look at that because they're always looking at the final bit. But just scale backwards all the way back to here, and you'll see this is like the highest volume that AMC had had in years on that big pump up. Very similar to what we see here on this breakout, albeit this breakout is crazy, still ridiculously high, right? The one that we had back in May. After it's hiked up, notice that the on-balance volume, when it's in this top half of the range, stays extremely elevated. It doesn't ever come back down to those lows again. It stays elevated. In fact, it makes a higher low on the second push. Excuse me, it's a higher high on the second push. That's a little bit different than what we're experiencing now because we really don't have the same thing going on. Again, these are both 4-hour time frame charts. You don't have a higher push. Part of the reason is because this first one was so massive, right? And it's so dramatic. But I think another part of the reason may just be that, it's just not there because, again, it was already achieved in this kind of first big push-up. You're not needing to go any higher. There is, however, a peak that's made, and it is making subsequently higher moves. It essentially comes back and resets back to about 50 million on the 4-hour time frame, which is similar to where we were in June 2024, albeit, unfortunately, in this case, that's a bit off because you can see that the price action doesn't actually come as high, right? But the on-balance volume does go up that high, okay? So in this regard, it's not quite the same. You can see there's clear differences, but there is a second hike that happens. So the first big buy up, you can see it right here off this OBV line. Again, back in the 2020, and I'll zoom in here if I can. Right here, you can see in May, it jumps up off the OBV, and you can see that that's the big hike. There's a big buy-in. There's another massive candle right here after it takes off over the top. Those two particular motions are really interesting because when you do the comparison, they don't really seem to be there. But I would argue that there are these two motions right here, and that the first is just extremely high. And that the second motion that occurs, which is on June 7th, is indeed very similar to this motion. And of course, this also keeps going up, but the on-balance volume is already kind of like flattening out, even trekking down. So you never really come past these first two initial peaks. There's similarity there in this regard. You don't really come past these first two peaks. It does do some more upward action. It comes back to a very similar range, but the on-balance volume is lesser, and it never goes beyond, okay? So when we look at it from that point of view, I don't think there's a whole lot to really discuss. Like, it's fairly straightforward. Those seem to be the two major areas, the two major tops. And I don't count this as like a gigantic LSPY or anything. But I think from looking at this as a top perspective, you could consider this like an auto reaction of phase B top. You could probably also look at it as a distributive top because this does come a bit high and ultimately sells off real low. It goes back below that upper range as soon as it's done. Very similar to what we see here after it comes up very high. And ultimately, in this particular setup, and this is what I want to get at here, this is very, very, very similar to the ramp that we have. You can see on the left side, to the ramp that we also have here. In fact, it's so similar that there's like a funnel that's being created, a megaphone pattern, all right? And the megaphone pattern, I've got them colored differently. I don't know why. Let me color them correctly. The megaphone pattern begins after this kind of double up thrust. There's a rest period, right? And it was really right around that June, that July area where this kind of begins to take shape. The megaphone is kind of there in the price action, but I wouldn't say like it is as strong, and it would be hard to kind of identify exactly where it's supposed to be. Although maybe you could make an effort kind of pushing it down this way and up this way. I don't really think it's worth the time to worry too much about that. I do see it very clearly here. And there's a reason that I'm mapping it that way and I don't have a bottom yet. Is because much like what we see here, I'm expecting an on-balance volume hike if there's going to be a spring. So this is the other thing that kind of gets maybe overlooked a little bit in the 2020. Not all the time. I see some people talk about it. But the volume increase that happens, there's a massive hike in on-balance volume before this really big drop. And it doesn't even come back to the top of the range, right? It just comes back to retest kind of the middle, and then there's a distribution and it drops. This is important because this is happening while GME is actually starting to work its way up. GME is already done its lows. It's just going up. It's basically doing little M crosses. It's basically just doing little sine wave crosses, LPS, 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 as it's going above the top of its range. So during the time period that's happening, AMC is going the opposite direction, and on-balance volume is dropping, right, as it's going back down towards its floor. But then there's this massive buy-in, as if it's about to take off, and then all of a sudden it rips the other way. And when that happens, not only is it like a rug pull down to a spring, but notice what's accomplished in the price action versus on-balance volume. There's a double flush that occurs, and it's very clean, which is kind of nice for us. Because if you look back and you've done your kind of mapping correctly, it doesn't really matter how you map the top of that, it always peaks over it. What's great about that is there is evidence that happens quite often, where if you peak over a particular area and then you reverse, it goes back over the opposite way. So this is like almost like a triple, because technically it goes up, down, and then up again. But what's interesting is that notice that the price action really just retraces almost back to where it was before. There's not like a significant difference in the price on these two bottoms. One is floating above the floor, the other dips just slightly beneath it. But notice what happens to the on-balance volume. It's almost a full 50-50. It's almost a full like 50% increase, right? 100%, I guess, A plus A, right? Going down. And then where does it ultimately go? It goes back to this on-balance volume floor that was established in March of 2020 before the actual drops happen. When you look at the interactions, they are consistent until the very end. And then this is where I think it's kind of interesting, is that the price action never actually reaches there. And I have seen this before in 2020. I don't usually give it a whole lot of thought beyond just, well, it just doesn't get there. But this is really important because right now, I think we're entering this kind of zone where we may be doing this up thrust with this pullback. And I'll give you one scenario where it may not happen. But one of the things that's really interesting, I guess, to note here is that if you look at this, and I'm going to use the the line tool on this thing, and I don't know if I can even it's not going to work. Let me try to use something else. I'll use like the drawing tool, I guess, if I can. So what I want to do is just show you like this doesn't actually hit either. And I guess you could visually sort of see that, but I'm trying to get it to work. It does not want me to do it, does it? Come on. You can do it. It's like, no, we can't. I can't do it. Whatever. I'll do this. That's a big line, isn't it? It's huge. Here, let's make that line a little bit more petite. There we go. That was a very nice way to say it was too chunky. So yeah, notice that this actually jumps this creek, but it never comes back down. So the assumption at that time, if I were doing this, I would have said, well, it jumped the creek, it elevated the on-balance volume. When it drops down, surely it's going to try to get back to that creek. It would have been lower, much lower than the floor. And I think this is very similar to what we're seeing presently, because in our current time frame, most of these creeks and targets seem to be targeting July 1st. I've said this quite often lately, that I think there's a possibility this is kind of a fake out run. And I'll give you, again, one or two scenarios where it's not, so you can be prepared. But ultimately, like if this hike in on-balance volume happens, then essentially it's 1-to-1. I mean, you can see the build out going into the bottom here back in November. You can see the build out currently where we are right now. Everything about it kind of smells the same. It looks the same. It did come back down, tried to bring it lower, right? But then it wasn't able to. You get this big pump up, massive increase in volume before a big sell-off. The double flush here, again, looking at what needed to happen, I was like, well, it has to fit. Otherwise, there's no point in this. And it does, because this is essentially the Megaphone pattern. You can see if it goes above it just a bit, it's going to be breaking to new highs. And then if it goes back below it, the same amount, it's going to go right back down to that OBV target line, which does, in fact, correlate to 1, 2, 3 points, just like it did in 2020. So I don't know of a better setup in some regards in terms of like how 1-to-1 it is. It is very, very close to the same thing. Very, very close. All right. And even in the way that it kind of held on to certain levels. Are there some differences? Yes. I'm not going to go into greater detail about, again, iterations, but I will say that this is essentially just another iteration of the exact same thing we just experienced, but much faster. And the same thing could be said about what happened here in 2020, where this second motion is really the same motion played over twice, but it's inside of itself. So if you take this particular setup right here, and you just take, let's say you were taking, I'll just kind of circle it for a second. Let's say you were taking like this area. I don't know if I can rotate this thing. Nope, sure can't. This is what you get for working with a screenshot. I wanted to just doodle on it, but it doesn't want me to doodle on it. So, well, you take this area working up, take this area working up, you'll see that they're basically the same. In terms of like what's going on with the push-ups and what's going on at the tops, it's the same structure. But it's different in that its scale is very small. And then it's inside of its own structure, which makes sense. I'm arguing that it's probably the same thing here, and it does fit, again, quite like a glove. I mean, if you do the same thing that happened back here in April, and you look at the targets, again, I'm doing a 1-to-1 comparison now with itself, not with anything in 2020, but just with itself. Just by itself, it begs the 408 target, which is kind of great, 403 to 410. Because if you look at where this came back to on this overall setup, this is the triangulation of where, once this kind of hit that bottom where it takes off to, it's perfect, okay? Or darn near perfect, all right? That particular setup looks exactly like what we have right now, except it's pointing towards 4, not towards 1230 or whatever it was at the time, right? So the setup there is very clean. What other evidence is there that that setup is potentially very bullish? Well, we're going to get to that because you get to the idea of RSI, and that's going to really make you go, oh, this is looking really similar, if not extremely bullish. So here's the basics of it by itself before I bring up the 2020 chart. So by itself, it's a bit odd because there is a really low middle that occurred right here. Now, a lot of people are going to look at this and say, well, this area and this area are both traversing the same region. They are. They're basically traversing the same region. Okay, this is slightly flatter, more on the inside of this, but it's essentially the exact same thing. It's traversing the same region here. So why not just say that this is it? It already did the on-balance volume hike and so on and so forth. It could be that that's it. There's not going to be this great 1-to-1 with on-balance volume. But one thing that you could not say is that there is an on-balance volume hike here. on that push up on February. So if you're just looking at this at a glance and you were looking at RSI, you might say, well, this and this look exactly the same. This is just more flat. All right. Yeah, I agree. But, and yes, there's more volume here, but that's almost problematic if it instigates a sell-off, because then all that volume gets dumped. What's more concerning, again, is the idea of like, hey, this is all those, shares accumulated get dumped. This is also a little bit problematic in the fact that it just, again, doesn't have any real breach at all. There is kind of a layering here of creeks, and I've got a few just to kind of do, again, this demonstration. But overall, all we're really seeing is kind of this flattening motion. It's almost like curling outward. This is very typical before AMC has an upthrust. It's not that typical before it has a real big actual move. Here's an example of one that kind of rounds out and flattens out, and it does have a big move, but it doesn't go anywhere, right? What we usually see is that when we have a big move, like looking back again, we get a real sharp series of bottoms. And I don't know why this got moved over. This should have been on the 4-hour chart. Maybe I was looking at the 1-hour chart when I did it. But on the 1-hour chart, the on-balance volume actually jumps over early right here. But you can see the difference in these like pointed bottoms versus something that's very like flat. And I'm not saying, again, it's not that it's impossible. There's an open door there, and we're going to get to that. But right now I'm kind of like skeptical. Okay, so on its own merit, you might suggest, well, that looks pretty darn one-to-one. I think it's going to like break out like it did here in April and just rocket the same amount. All right, but what then would prevent it from doing the same thing all over again? Because a lot of times people will say that, and they're not really thinking about like, well, what would be the big goal in that? Well, the big goal in that would be to take it all the way up and just leave, right? Maybe. If the accumulation's done and they don't need any more, you can have what's called an LPS, where you don't actually make a new low. Instead, it just holds a bottom and then it rips and it doesn't come back down. This time it goes up high and then it consolidates up here from like 7 to 15 or something like that until it breaks out again. It is not impossible, okay? But this is where things get kind of interesting, because I went back to, of course, I was trying to like make sure I was like looking at all this, and I was like, well, I want to make sure that it goes back to the 2020 example, and I can kind of do a comparison with RSI at that point too, and just see what it looks like. So notably, there's a lot of similarities, but there's a couple things that are particularly different, and this one has a little bit of a I don't want to say it's like a misstep, but it's almost too different in some regards to make a really perfect one-to-one comparison. So the first thing I want to point out is that there's actually an early drop here in September. Now, part of that is from the shift. There is, however, looking at 2020, a downtrend leading into that March platform. So I'm going to use the regular chart for this one. Just go back and look at it. You can see that this is essentially a downturn for a long time. And if you go back and you look at where that came from, it does come from an LSPY platform. So if you're wondering like, well, how could you do that comparison if they don't come from the same place? Well, they actually do. They do come from the same place. The difference is that the downturn here doesn't seem that big of a deal. It just kind of places the sort of where the top of the range is going to be, and then does this big drop after the fact. Ours is almost like inverted because we had this long 10-month period here of sideways, just like there was a long period of sideways here, right? And then it drops, and it drops hard first because of, again, that shift and because of the reverse split. Like both of them together, it's not just that there's a shift in value, it's like that's being acted upon by sellers. So there's active trading going on there. It's not just like magically it shifted or something like that. That's not the thing. But then it has this kind of slump to the side instead of going kind of down and racketing on the bottom for a minute before going back up. So there's some distinct differences. And I think the RSI at that point does need to be just kind of mentioned that, like, yes, there are some differences and that they're going to be obvious when I talk about it in a second. This needs to be accepted as like part of this because there is a downward motion. So there's an initial sell down that happens, and there's frequency here that's, frankly, I mean, there's quite a lot of oversold areas on the 4-hour. The daily, it's a lot less, but it's still there. So, I mean, it's a little bit less, but it's still there. I wouldn't say it's a lot less. So when I do this comparison, just keep that in mind. So this initial sell down that happened really starts back here in August going into September. And you can see there's like a triple bottom type approach to this. Weirdly, the lowest portion on this is not actually anything that looks particularly harrowing or something. It's like pretty straightforward. It ends up being the main floor that we sit on, which is like about $4. So that ends up being where that big sell-off kind of finally finishes. We have not yet ever become that oversold again on the 4-hour. It has yet to happen. Every single other sell-off has been a little bit higher, and these have been a little bit higher. Why is that good news? Because if this does make a spring, it seems very likely, especially if this is like kind of a pump and dump deal, especially if it is, because this will go pretty high, then come back down to the bottom, right? Accelerated fashion. It seems very likely that we're going to get a macro big picture divergence here. I'm not saying it will happen because I don't know what's going to happen with that bottom if and when it happens. It's an if-then statement, right? But I'm saying that if it comes down low, it seems pretty likely, especially if it doesn't make a super low spring, it just comes to like 237 or something. It seems very likely that this is going to be higher. So $4 is this platform, right, that's created with this high amount of volume. Notice that after we took off at January 8th, after we took down from $4, we have not come back to test it yet. Another reason why I'm kind of concerned, because again, in 2020, there was a test, right, on that back test on that middle area. We never had one. Well, we came up to 370. Remember that? You thought it was going to go to 4 and it didn't go there. Yes, I remember that. And I also remember feeling the same thing when we walked down here, that I thought it was going to come up higher to 14 and it never went there until later in this upthrust. It's the same iteration. This is the same motion down as we experienced over there, which is probably why I'm having a lot of the same feelings of why didn't it do that? Why didn't we go back up and check it? Like it was the same back here. When we came down, I had made a video and I think it was January 2024. And I was like, I think we're going to like bottom out and then go up. When we went down first and then up, but eventually we're going to go back up to 14. We just never went back there. They left it untested. And that's the same thing I'm feeling now about 4. So again, it's a very similar setup. It's just smaller. All right. So one person, again, might look at this and suggest, well, it's bullish divergence. Who cares? It's going to pop if it holds up here at all. Even if it came down again, it's still divergent on the short term. If this RSI holds up, it's definitely going to be going. And I agree. I don't think there's a lot of debate here. I'm very sort of wary of just saying something is like a definite. But in this case, it would be very unusual to have this large of a bullish divergence and have no follow through. It's about the same length and maybe not quite as deep, which is important, I guess, to think about. But it's about the same length as the one that we had from January to April in 2024. Okay, so that divergence is definitely there. There were a lot of bullish divergences in the 2020 example. A lot of them. And again, I don't think you can make a perfect one-to-one comparison. I don't. But it is important to note where the main features are. And I guess that's where I want to kind of hang my hat here. You have some considerable lows before coming into the range. You can see that pretty clearly, I think, on this chart, that these bottoms right here, oh, now it's working, right? These bottoms right here, excuse me, that made a triangle. This bottom right here, those are kind of like your main features, right? The main 3 bottoms. There's also like 3 main tops, maybe 4. Now the price action is doing all kinds of weird stuff. It's not in the same spot at all. There's similar areas, yeah, but like this is way high, you know, in the price action. These two are both around the same area. This is higher than those two, and then this is actually lower than those two. But you can see the RSI, they're all very consistently the same height and roughly the same because, again, overbought, oversold nature from on that time frame flattens everything out, makes it easy to see. Okay, so those are your basic waves, but you can see the elevated nature of this, even though it does come into oversold territory. We have something very similar in our current time frame, albeit it is a little different. Okay, if you go back, the only place we see it being overbought, right, before all this stuff happens, ignoring the shift value, all right, ignoring the split, the only time it happens before on the 4 hour is way back here. So again, using the same kind of comparison, you'd be looking at this saying, well, that probably is like your March top because there's no other place. Even though this does hike up quite a bit, it doesn't quite get there. Well, that does do something quite interesting because then this becomes a little bit more dynamic because that's a really short distance and this is a really long distance. And that's important to note. The only other places we see it peak out, again, it does it here. Doesn't quite get there more than once, but it has a lot of high hits. And then here it barely hits it. And I think you could argue that it doesn't even quite hit it, but I think it's close enough that I'm going to say, yeah. I'm seeing this as like a very likely, again, ricochet off the top. So we're seeing the same formation, same thing here. It does become oversold, right, momentarily in between these two peaks. This is like between the cat ears. So we're seeing a lot of similarities, yeah? I think so. So what about this? Well, this is the messed up area because if you look at this, it's really difficult, I think. It's very difficult to find it to be one-to-one. First of all, again, the sell-off that happened, and I'm going to kind of zoom in on just this part. So everything up to that point actually looks pretty one-to-one. And some of you guys are like, well, that's probably because the market's going crazy right now. And I would say, yep, that's probably right. When you look at this and you take a picture here of this image, you'll see that this is clearly like flattening out, but it's also got the bullish divergence on the 4 hour time frame, which is the same thing that happened before. However, there is an extra jump here, and it is kind of here. It's kind of present. And I'm going to make a kind of a loose case for this right now, and then we could debate it when we talk about the next point, which is the last point I'm going to make about this. This particular setup here, this is where it jumped the creek. Weirdly, there's no clear evidence of that on price action at all. But it did jump the creek on the 4 hour time frame for RSI. I think part of the reason this exists, maybe not the only reason, part of the reason this exists is because of how low this went, right? Now, in contrast, there is no creek jump here on this little guy that bops up. My first instinct looking at this would have been to say like this area looks the same as that area, yada, yada, yada. But the truth is that there is no creek jump on both the price action or on RSI right here. Like, it doesn't happen until February 11th. So whatever the argument may be, you can't say that there's any kind of a creek jump. So if I were making the argument that like, well, I think this has already happened and it's all right here and you're missing the point, Booksy. Okay, fine. But at least for this part, you can't say that didn't happen. There's no creek jump on price action and there is none on RSI. However, there is a very large, dramatic creek jump that does happen here, right? And coming over the top and essentially making that volley, right? But it's wider. It's considerably wider. And then, of course, we're talking about the divergence. Okay? I'm coming to a point here where you guys are like, what are you talking about? So part of me thinks maybe I'm like overthinking it, you know. Obviously, the on-balance volume hasn't moved at all. Nobody could say that it had some miraculous hike. It hasn't happened. Volume's been very low. Even in these jumps across these creeks, been very low. we definitely seem like we're moving towards a similar area to April. Yeah, I get the iteration thing isn't targeted really high, but couldn't it just rocket anyways? And RSI looks pretty similar. Yeah, I mean, there's certainly reason here to suspect that it could just go, right? This is not a drill, so to speak. Like, it could just go. But I think it'd be missing one thing, and I'll tell you what I think that is in a minute. But on the whole, I'd have to just say, like, I just don't buy it. Like, it doesn't look right to me. It doesn't look the same to me. And I know that people are going to be like, well, that's a bit too nitty gritty. It's obviously bullish divergence. But I want to point out that both of these have a pretty decent short-term bullish divergence. They do. So it doesn't matter which one you look at. They both have a short-term bullish divergence on that move. I've got it marked here. And they've got a larger bullish divergence there. So by all means, it looks like it's just ready to go, right? Except that the on-balance volume doesn't look anything like it yet. It looks like it's missing this last piece. The price action and the setup from an iterative standpoint looks like it's trying to finish a last piece for the on-balance volume, not finish RSI. So my question was, when I looked at it, like, okay, I could probably make an argument that it's ready to go. It's just going to take off and go to the moon, literally, in like 10 days or something. And people who are missing out, whatever, because they don't think it's going anywhere, that kind of thing, right? I could make that argument because it's right here. I mean, I could try to, and I could say that, well, it's the same as setup as what happened in April. It's going to be the exact same Booksy. It's even on the same area. Look, it's sitting right there around the 50. Once it holds this, it's just going to rocket up. That's not going to stop at 4. It's going to go all the way to like 12 or 15, because why not? It should be the same thing. I mean, it could be that that's the case. Again, except for the fact that there's no spring. And if there's no spring, then this is where I would put the spring, and all I would do is iterate it again. And I've seen hundreds and hundreds of times on AMC where I think it's done, and then it just iterates again. And this is one of those examples where, like, a lot of people probably thought it was going to go, and then it came right back down because it hadn't finished a bottom. And back here when it was up high, and I was like, all right, I could get wrong. I could be wrong this time, been right last time, right? So let's not confuse this and say that, oh, he was right last time, so he's got to be right this time. Not true, okay? I could definitely be wrong this time. But last time I sold at 10 because I was like, on my options, because I was like, I don't think it's going to go because it's not really made a full bottom yet. And then when we got down here, it's like, yeah, there's possibility it buys back up. But my thesis was for the greater part of a year at this point has been, though, maybe it goes up to like 8s or something, and then it drops back down. Never did I really think, except for like one time, there was like one setup that I found that I thought, well, we could do that. Did I think it was just going to go again? So I'd always thought it was going to come back down again. And I feel the same way now, where like it definitely could just go. There's a setup there for it, and I'm not going to be happy, obviously, if I get out of something and then it just goes. You guys would be like, ha, what a dummy. That's fine. I'll be a dummy about it. But really, like, I just don't see it as strongly as that. I think there's a very real chance it's going to iterate again. And this is why, okay? The current setup has some similarities, and it certainly would make it look like, well, if that's the same, it's just going to go. It's the same area, same bottom area. Why not just go? You don't need to have a spring. You don't. But that's two very distinct realities in something like Wyckoff. Wyckoff is like an LPS where you come down, you fail to make a spring essentially, and then you go. You don't need it because there's no liquidity crisis. There's no need to have this big pump and dump with shakeout. Again, I would argue that on balance volume on AMC seems to suggest that we need it. And if we were to just go, we'd probably be in the same, if not a worse situation than we were last April when it pumped and dropped back down. But instead, it would be like on a macro scale, and it'd be really ugly. That's my opinion about it, based on where the on-balance volume is, okay? As opposed to flushing it out and then going. Like doing a full reset on this whole macro picture, right? But then this is where I come back to that beginning part that I told you about. I said, hey, remember the March thing? And I'm going to kind of stop here with this AMC analysis because I think that at this point, aside from like one other scenario, there's not much else to say. This is not really like, these waves are pretty even. Like it's not really that different. Like each one is roughly the same timing, which is kind of fascinating to me. I'm like, well, they're all kind of the same timing. But one thing that's important to note is like the walk down, the way in which again, this kind of thing bleeds through down. This time period, I'm gonna try to like make it a bit more accurate here. This time period is more similar, I would say, in some ways to that early walk down. And I know I'm reaching a little bit here, but in our initial walk down, it's like really long-winded. And there's something really off to me about this because this initial one doesn't actually peak and go over the top, and this one does, like as if it's already getting overbought, but it's super low, which is not really a good sign. This didn't even get overbought, and this is back when we were at 490. Like nobody believed it was going, I guess, and didn't get overbought, and then it sold back down. This got overbought, and we only went up to like 360, which tells me there's a lot more buyers down here for sure. And I think that another part of this that's kind of bothersome to me anyways is that when you look at the big picture, this particular bit, September 11th, that's the real low spot. You can see it's kind of right before then even. I feel that there's a decent chance that this timing is a little bit wonky because of everything that's happened this year. And I'm not going to go into like greater detail about all the reasons why I think that is. But there's like an asymmetry to it. Like none of these are particularly exactly the same. There's a really long distance between this bottom and this bottom, for example. Like they're hugely different. And that's very different than what we saw in 2020. And as a result, I'm kind of left wondering if the wave itself, if this is an adequate comparison, because I think that there's no way to real time it. And it would not surprise me at all to see it do it again, where this had like a triple motion. This could easily have a triple motion. So I'm like, all right, the overall motions in the original one are very even. They're not even here, not as much as they could be. And that makes it a little bit difficult. Are they sort of there? Kind of. Sure. Sort of, kind of. Yeah, kind of. Another thing that kind of bothers me, and again, I don't want to go like too crazy on a lot of this stuff, but if you look at this one and you look at the overall picture, certainly this looks like it came back down to retest that creek, right? Which this did as well. So you could say, well, that's checkbox then, right? It's there. Yeah, I mean, it is. Ultimately, like once this takes off, it doesn't come back for a really long time. It doesn't ever come back to check any creeks again on RSI. Big picture wise, taking a step back and looking at this other one, if I can get it to work. Here we go. I think one would argue that this is probably what was being accomplished RSI, on an RSI scale, okay, in terms of like a retest here. If you go from the top back in March and you look at this as like an SOW, like a weakness, sign of weakness on that trend, there's a press up to it here. There's a resistance right there. There's support right here. It's a pretty classic, what I call like as a cross, right, for the wave. Meaning like this went up and it derived kind of a middle line to it, right? And then when we leave, we really come back to that middle line. And there's a couple different ways to draw it. But this then interprets very differently because this looks like it's a final push down, but then this is like a buy up on that line. And this is the final like checkbox on that line. And this certainly makes sense to me, okay? I'm looking at this in the current time frame, and I'm not finding that to be very easy or consistent. What I would say is that ultimately, it certainly seems like this could have been it, like that could have been the checkbox, but that's not in the right place. It doesn't really make it correct in that regard because it's like missing. It's like it's out of order. Does that make sense? If this were the right place and it hit it, then we should have been just like kind of off. We were not. Instead, it reads more like a rebound that's kind of checking it and that it still hasn't quite come back yet. Well, how sure are you that that has to come back down? That's a question, right? Like, I don't know. I can't answer that question because it's not one that's like easily answerable, right? Some may argue that, again, this is it. It checked it. It's going to go. I'm going to just sort of sit here and say, I think it's a very real possibility based on the on-balance volume and everything else. This has one more iteration in it, and it doesn't actually go in May. But it has a nice big pop in May, and then it slumps until July. And it's not because of the July tariffs. This was something that I found before then. Now, what of the opportunity that this doesn't do that? What of the opportunity that it does just go? All right, there's two possibilities here. Number one is that you have a buy up, essentially, and this buy up happens right at 330. So if this advances and it does press into the $4 area, and then it retreats and it holds about 330, which it probably will regardless, and it will probably look kind of bullish no matter what, okay, because it would be effective that way. This is actually the main creek right here, coming down from the last two peaks. It is potential that that holds there, and if it does, and there's a buyback in going into the 28th of March or thereabouts, the 30th perhaps of May, excuse me, not March, then you could see it, I think, move really, really far in June. It's going to require active attention. It's not something that can be predicted ahead of time unless you just already are kind of saying, yeah, it's going no matter what. It have to be watched. And at the end of the day, if this pushes higher, then you're going to have another potential buy-in target right above. But I did find that there was evidence. There's a red line coming through here. It looks kind of random, but that red line actually goes back. It's the red line that it frames the entire downtrend. It frames the entire downtrend, and ultimately it's where we like split valued underneath it as well. So again, shift value wise, I think that was a big part of it. But it frames the downtrend, and it ultimately gives you a really simple downtrend to look at from the last few years. And that's the level at which we are going to be intersecting if and when we pump up here. It seems really obvious to me because they spent a lot of time right after earnings. Operators did, not moving it. They let it go and just let it sit there at 335, which I found to be very odd. Like that was one of the weirdest things I've ever seen because it refused to make any kind of, almost like they were waiting, right, for something. It refused to make a decision at all about direction. There was like double tops and double bottoms. You could not tell. And it was very low volume. And I thought it was very strange. I put it in the back of my head. I'm looking at it now and I'm like, yep, that triangulates to right where it would need to be in June in order to really have that breakout and take off. So there is an LPS opportunity here. If it goes up above and then it comes back down and it has a bullish reaccumulation here, this is essentially just a big J pattern buy-in, then I think it's going to go. And I genuinely do think it's going to go to between $12 and $15. I think that's highly likely. I think that that's a strong possibility for an LPS if it happens now. Okay? The other possibility is kind of a weird one, and it has to do with, and I just put it in the Discord group if you want to look at it, but it has to do with what would be considered a final sell-off here. Could you have a spring without actually going up high and driving the price low? Well, my answer is yes and no, because on the one hand, if it happened this way, and I'm going to show you, if it happened this way, I would still be skeptical, and I'd be worried that we're still going to drop again because it's just not enough. And I've already told you why, because you need to have that hike in activity. You need to have the FOMO, and we just haven't had it. There's just no major increase yet. You need to have that big moment, and there's just none. Well, maybe they want to like just keep it low key and make everyone think it's dead and then it just goes. Yeah, maybe. But even if the price was kind of low key, that on balance volume should be going crazy. And underlying buying and selling should be going crazy. So there is a possibility here, and I kind of marked it off a little bit weird. This is what a distribution would look like right now. So if you're wondering like, man, you're so sure about this thing going up to 4 because of these triangulations, but what if it just doesn't go? You know, you're wrong. And these are like those low pivots that you talk about where this is like the opposite day. It's possible. Okay. And it would be horrible if it happens because it would ultimately look kind of bullish until it isn't, and then it would drop. But I can tell you right now where that drop would be because it's the same thing every single time for AMC. The LSPY, or excuse me, not the LSPY, but the preliminary support coming down here at 274, if it's bullish, it will use this and act like a support. It will work its way back up and out. And I don't have it on the chart right here. All I have is this other alternative. If it's bearish, it will use it as a supply. And in the end, what you will see is you'll see a sign of weakness early on. We do not have a sign of weakness right now. So if you're somebody that's like, nah, it's going to go down. Okay, that's fine. You can believe that. But I would have to say the same thing for the bull side and the bear side here, is that neither really has confirmation yet in this particular range. In my opinion, they don't. There's a big buy-in right here. There's nothing really else to look at. It's an auto reaction, potential phase B top. You could argue, well, I think this is a sell-off because there's a one high bar here. And I mean, you could do that, but ultimately there's no SOW. It made a higher low. So even if this comes down again, it'd have to drop beneath like that 262. And if it does this big kind of a rug pull, and who knows, we got Tesla earnings, maybe it causes the market to crash. I don't know. Right now, all that I can say is it's jumped the creek that it has. It's kind of sitting right underneath that preliminary, and there's nothing wrong with that. If this takes off to the upside, it makes a higher low back here at any point, and then takes off to the upside, and it goes to 292, which is where I would expect it to go. I expect it to push up to near 292 next. If it goes to there without making that bottom, I have to kind of default to saying it's bullish right now and that the first setup is still there. But this is the question, right? Like, what if it just goes? How could it just go into a spring? This is how it would happen. Would be probably set up into, there's obviously there could be some news that changes the speed of it, but it would probably set up into earnings. Just either way. And a UTADs would happen on this side. They would be a sign of weakness. This sign of weakness would point low. It's going to basically become a bracket for a bottom range. All right, wherever the low is down here. You'd have this creek, which thus far has just been jumped and retested. This creek might not even hold. It might break during the SOW, right? But this is going to be a general trend down. It's like a pacing line, if you will. Okay. Right now, I think it's out. And I've got multiple creeks right here that actually work really well in a bullish example. In a bearish example, you're just going to get up thrusts. They're going to be like U shapes. And then ultimately the last U will be a pump. It'll probably look like it's pumping instead of dropping on earnings. And then it'll be bad. If you see it pump up and it looks like it's pumping up towards 276 and it's like been low already, it has a sign of weakness and it's pumping up towards 276, I'm going to say that it's a very, very high probability that that is actually bearish, especially if it's had these up thrusts, right, that have checked these creeks and they're not going above it and holding above it at all, especially if they're U-shaped. Then it's going to jump. If that happens, definitely a possibility it could come down to like 226 area, somewhere beneath 239. Could that be a double bottom if it just hits 239 or an early spring? And the answer is yes and yes, because both of those could be reasonable here. If this is all you're going to get and there's no other hike in on balance volume that's going to take place and this is all there is to it, this drop might just be the spring and it could just take off and go to the moon. My assumption would be that it would build out between now and like May, I don't know, 19th, something like that, and then basically break out and do the same thing again going into the end of May to about the 28th, and then it would break out again from this kind of major overall, and it's like, it's so far away that it would have to do quite a big move to get there. Frankly, it doesn't really fit this model, to be honest, but it basically have to come up to like $3, and that's where the big move would ultimately start really going. That would be the breakout. And then you'd move up to each of those fan lines. Otherwise, I'm thinking that that's not the most likely thing to happen. This doesn't really make a lot of sense. And ultimately, I got to be honest with you, if this happens, I'm still worried that it's going to go up, because this is a really weird setup for a spring without any kind of push up. And I don't think this is enough, guys. I've said it before. I don't, it doesn't do anything. On unbalanced volume, it barely even jumps like the smallest creek. It looks like a setup that's getting ready to pump you up, but not one that's going to take you to the moon. So I would still be very worried and skeptical that this goes beyond 4, even if this happens, because the phase B bottom is not an assumption. You can't assume that the phase B bottom is done until you see that big motion. That's what causes it to react. The reaction is where the bottom is. So when people define a phase B bottom, they're looking for that big volumetric reaction, which I don't see here. You might argue it's 330. I don't think you could argue it's here at 3. Not really. This is just like a walk down. It's pretty mild. This is the most volume we've had for a little while, and it's off of that 240s area. It's a good spot for it. But certainly, could you make a phase B that's lower? Sure. It's not out of the, I mean, it happens all the time. So it's like, it's not ideal because it's confusing and it makes you think that this is a spring, even though it doesn't have to be. So this is a setup that I'm not really a big fan of. So there's an LPS setup that basically just doesn't have a spring. That goes up, holds at 3, and then just continues to break. Holds at 330 and continues to break. There's a short-term distribution setup that leads to a quote-unquote spring that could be a spring that on the big picture you'd have to just say, well, they're not going to do anything with the unbalanced volume. They're just going to let it be sky high and just keep taking it up, which doesn't make sense to me, but you could argue that that's what they're going to do, and there's not going to be a spring. I find that to be difficult to digest. But is it possible? Sure, it's possible. And I don't think that most of this stuff I'm like, this is a little less likely to me, but you never know. Sometimes I pick the ones that I think are most likely and they don't happen. So for me, I think it's a widening cat ear. I think this is, again, a dropping cat ear right here. It's going to need to have an upthrust. Once that upthrust happens, I'm looking at it being between 385 and roughly 460. I've got an average price there around 412. An extremely high price of 5. I think it could break even to 5 and still have a pullback. Interestingly enough, the price action from 4 down, if you use the anchors that we've built, one of them being that 330 area right here, they don't lead to a significantly new low. They lead to like $2.15, which has come up quite a bit. So I'm like, there is a chance that, yeah, it goes down really far, sure. But there's also a chance that it just doesn't. And I think it could hit something like 215. And as long as it comes back up above, it's fine. I've already made a case for the July thing in other places. I'm not going to make a case for it here. It's a weird timing, I know. But that's what I think is very likely if we do this kind of push up and drop. And it does coincide quite well, again, with where this is aiming for as a creek. It's currently aiming for that OBV creek intercept. It's right around 180s going into July. The only thing that you're missing here is like a distributive action between like $3 and $4 to like kind of bring that OBV up, right? Get people hyped and then drop it back down. And again, refer to the beginning of the video if you guys want to see that again. So I said I was going to keep this shorter. It's really about the same length. But I think it's cleaner and it's more straightforward, okay? Now, I'm not going to do GameStop in the same way, but if you want, I can kind of look at GameStop, and we can take a look at those if you'd like. When $50, $4, question mark. Oh, I'm sorry. Did I miss the rest of it? The rest of it's there, guys. I've been talking about it. It's after you hit that spring, you come back out, then you're going all the way up to 15. So there's nothing particularly like interesting after that. We're not hitting $100 in my opinion, but I do think you're going to get up to about that $50 area. I cannot see any logical reason why we would hit $100 in the next 2 years. And frankly, anyone that says we're doing that, I don't know where that's coming from. Like, you'd have to have some kind of a miraculous jump here over this region. This LSPY region that was built out, and it is an LSPY region that was built out here around $41, is notoriously sticky for the stock. I mean, we're talking about an area that historically has been, every time that there's been any kind of a move up, that area has always been a stopping point. Like, I cannot find a single example on this kind of a structure where that does not create an issue. I think what we're looking at is a push up into February 2026. I don't particularly care if people think it's not going to happen. I've been talking about 2026 for like 2 years now, and I still think it's 2026. I understand there's differences in the way people view the markets and things like that, and like obviously news changes things. But I still think it's the same time period. And frankly, you know, this is the time to be bullish, not when it's pumping past $15 or something. You know, this is when you want to have, as best as you can, the most clear and obvious evidence that there's going to be a run. You cannot have, like, no one is going to be able to predict it perfectly, right? So no one's going to have like perfect foresight. But I got to tell you, you know, back here when this was dropping and people were whining about it and they're upset about it, I'm sure it was the same thing. I mean, it was a different time, obviously. A lot of people were probably on that hype train before it even ran. But yeah, I'm looking at the comments. I'm not trying to pick on anybody, but there's people in our comments who are basically saying, it's not going to do anything. It's just going to keep dropping. Well, yeah, I'm sure people said that back here too, when it was falling off a cliff and then doing it again. Peak despair, right? That's the spring. Spring is peak despair. It is when you think something's good and then it's not, and it's horrible, and then it's good again. That is what a spring does. Like, that's the purpose of it in some ways. And I don't see that just yet. I'm not there yet. I think we're missing that push up and down. Again, could you make a case? I'm just kind of repeating myself again, but yeah, you could make a case it's just going to go. So if there's somebody out there that you follow and you're like, man, you know, I think this other guy's got it right, I think you got it wrong, that's fine. You got to do what you got to do. I'm telling you guys this because I think that there's a very real possibility that this is a magnificent bull trap before a drop down. And I think that the difference between this and GME is the same as the difference as what we experienced, because it's already happening, as what we experienced in 2020, which is GME had already hit its lows and was walking out the whole time. AMC was going down. It would literally be like saying December on. GME was like breaking out and getting ready to go from December on. That's the comparison. So while this is going down, and if you look at that time period, just to contrast, because again, a lot of people will always say, well, one's going to lead to another. That's not quite what happened. This time period right here from September on, we looked at it yesterday. This GME was already out. It had hit its lows back here like June or something, or way before then, April. It was already like walking out, going up, and it was getting ready to squeeze. It was making consecutive highs constantly, higher lows, higher highs by this point. AMC takes a very different course and goes down. So one of the things that might be a little bit confusing perhaps is that we may see something like that. Again, it's similarity, and I talked about it yesterday on GME. The first push here may only go to like 32. And if at that point it's ready to go for a spring, it's going to iterate back down to 17, and it's going to change everything, right? But if it doesn't go for a spring, because it's not going to go back beneath the ice level, then it's going to hold here at like 26. It's going to go right back up again. And it's probably going to go to like 45. And then what's weird is I think there's going to be a month period where it's just walking out. We did the iterations yesterday. This is what they look like if you have an LPS here. If you have an LPS here and it doesn't go back below that $27 area, if it manages to hold, 30 is even better, then that means that the next iteration does the same thing and the next one does the same thing. And it's an accelerant essentially, because each time it would be even higher. It would build out into July. But this is like the walkout that GME folks will be experiencing, and it would be like building out from like 35 up to 50, and before it rockets all the way to, potentially, I don't know if they're going to give it away, so to speak, but if it happens in a similar fashion, that's what it would look like before it goes to 125 up to 225, I think. 125 being the previous all-time high, could have a backup there, but it's possible it just goes all the way in one go, like it did the first time. But this is not incongruent. Like, this is actually quite similar. It's almost the exact same. If AMC is, while we're thinking that GME does that, if it continues to iterate with an LPS mindset instead of a spring mindset, it will continue to have those J shapes. But guess what? AMC may not have an LPS mindset. It may have a spring mindset. They're both bullish. One just is not going down for liquidity, whereas the other is. This is still bullish because this push up and this drop is an iteration that's smaller going down, and it's building into a spring, just like it did in 2020. I think it's a very important point to make because there might be a very strong disconnect. I keep saying might because I don't know the future, guys and gals. I don't know it. But if this were to happen, it would not surprise me at all. And I already talked about this build out. I did a 1-to-1 with April, and it is very consistent. So even though I've had this, I put this on the chart a minute ago, and I kind of just kept it there because I was like, well, here's what a May 28th run would look like. What I didn't talk about is what would a bull run here look like. And a bull run would actually be really quite simple, quite easy to read. This creek cross holds, doesn't make a higher low. This pushes to 292. When it comes back down, it checks the next creek. This is really important because these are like fans right here. They're kind of spreading outward. This would come back down and check the next creek. So it would come back down, but it probably floats at or around that initial preliminary support because it's stronger, right? Then it comes up again. This time it does not go as high. Probably gets rejected by the last outer creek here, which is this higher red line, because most of the time, even if it advanced, it wouldn't advance much there. This sets you up into a distributive action going into a very small distributive action going into earnings, not one that's like a huge scale. So first you advance over the top creek, then you back up to the previous, which is what happened here. By the way, you advanced over the top creek. They created a new one. Here, let me remove it for a second. This advanced over the highest creek, and then it backs up to the previous. It's going to do the same thing again. Advance over the highest creek, then back up to the previous. This is the bullish outlook. So how do I know it's going to be bullish? If this happens, and it may not be exactly what I'm drawing, push up above the next retreat. Okay, well, what about the last one? That's going to be tiny then, right? Yes. This is the one that I don't think it usually matters. Usually we walk away from it because we don't actually we don't test it in this case because it would be like compressing up really high. It'd be really weird. It could happen, but I don't think it's going to. In a bull case, I would say that this probably doesn't even go beyond much. It's somewhere in here, it distributes. It doesn't ever hit the high creek. Then it comes back down. This is where you get a localized spring action potential. This is where it could come back below even 263. But I think what's most likely is that it's going to create a bottom here similar to where that preliminary support is at 272. And then it's going to drop that bottom and probably try to head towards 265. It'll look like it's bleeding out. And there'll be one more bounce out. Okay, I'm not sure if it's going to be in that Wednesday move or not, but right now it is measured that way from bottom across. I don't know. That's the creek cross right there. It just happened. So unless like it's the second creek cross, which is kind of weird, usually that's the way it measures out. This looks like it's going to terminate and finish right on earnings. So again, the previous one had it coming up with upthrust. This would be like rounded tops, right? There would be a lot more chop in the upper regions. It would certainly look like distribution to some degree, but you'd have a lot more time spent up top, a lot less time spent down bottom, right? And somewhere in the very end here, you're going to get what looks like a, more than likely, what looks like a bit, it's probably going to be a bit janky even. You're probably going to get a bit of a Wyckoffean reaccumulation. So you'll have like a push up, a second push up here where it's trying to advance, and then it drops down low for a spring. And then you'll get that spring, and then the next day it'll be up, like really up. Probably gap up, retrace back down to 284. It's very one-to-one with what happened last May, but that is essentially the build-out for this type of a motion. That's it. Then it'll hit that last creek, and it'll be right at like 285 or something like that. You know, I'm just kind of estimating. I don't know where it's going to be when this pushes up, but you would be able to use that final creek. That's going to jump the last two, and then it's going to back up and run. That's it. That's the bullish outlook right there for this particular range. This is really easy to follow. Here's what's going to be frustrating, okay? One, this push up right here is probably going to get a lot of FOMO involved. You should start seeing that on balance volume on a shorter time frame hike up. And I mentioned this because I have, while I do have, you know, concerns about the possibility of like a slide here. I mean, it's certainly not impossible. And if it happens that way, I'm going to say like, hey, this is bad. I'm not going to say it's good. I got to say, like, the current setup right here looks really bullish to me. Like, the on-balance volume already jumped up. It's got, like, a wedge action. It already jumped up the wedge. It looks like it could come back down. But if it's going to really go up to 291 again, it's like I can't even really see if it doing that. This is more like that example with this is how it could, like, break down and go back up. If it's, like, a May run, you know, late May run, I could see that. But just looking at it from a bull potential, honestly, it kind of looks to me like this would just kind of go up and then come back down one more time. And then that would be that. And you'd actually be looking at a layered setup like this, as opposed to, you see what I mean? As opposed to it coming back down again low. Again, debatable. Some might say, well, I think it's going to go up and drop lower. Some might say, it doesn't really matter to me. I'm just going to wait and see. But this is essentially what that would look like. This already looks like it's jumping up and over. It's hiked up. This is the first time this is broken in the whole downtrend. Well, yeah, but it is widening out, kind of. But this has been the most consistent. And ultimately, if you ignore that peak in the top, there's really no other place that this is broken out, except for that peak. Well, and it's going to dump. It's going to go dump. Like I said, this is the 1 hour. I'm not saying it couldn't happen on the 1 hour, but this is very different than the 4 hour. The 4 hour has no real evidence of a serious hike here. There is evidence of a walkout potentially happening, especially if this gets that last build out right here. It looks primed to do so. I mean, you can see it on my chart. It's very, very close. So we don't have to know if this is definitely going to happen or not. You can watch it. And I'm telling you right now, this is looking very, very good if it does this setup right here. Like very, very good. Like highly likely it's going to break out and have a run up. What other evidence is there that it goes up that high aside from the comparison? I mean, there's not that much. Every time I do these things, I usually look at stuff like this. That would be my evidence right there. Is like, what direction was that heading before it kind of took south? That's usually the direction that you're kind of looking at. I don't think there's much debate about this. Clearly looks like it's pointing towards the top there. you can. I didn't even test this till just now. Like that's how I'm like confident I feel about it. I'm like it's not even really a big deal to me because I don't really care if there's an abundance of evidence, because there's also an abundance of evidence to the downside, and that's where I'm like, okay, so there just seems to be a missing flush here. It's just not there yet. Unless it's going to be an LPS. What happens in an LPS on the on-balance volume? I think what happens is this. It just holds high here, and then it breaks out. I don't think there's anything else to it. I was kind of looking at the, I was like thinking about that possibility, and I was like, well, I guess if it doesn't break out, it just won't go. I mean, it's that simple. It just won't go back below there again. It'll just take off over this top, and then that'll be that. But I don't know how you would know, unless it does this, that it was going to definitely do that. So that's the only thing I can say. But yeah, this looks really solid. It does mean that the next 2 weeks are going to be super boring. Or the next week, I should say, is going to be really boring. In fact, it may actually, on-balance volume may be increasing, but I bet if this does this way, I would tell you that this is probably going to come up and down, and in a way that we end up with like a kind of a nasty Monday next week with a turnaround Tuesday. And more than likely, if this occurs in this particular way, the rest of the week's just chop. So your Friday may end the day like around 288. In the next week may end at like 282 or something. You know, it's not really clear to me exactly where it's going to be, but it'd probably be a very boring, very, very boring 2 weeks. Like it's going to, or week or so, it's going to look like it's not going anywhere. So just on my chart, like that's the comparison. I mean, you could easily just be barely moving week to week. So those weekly candles will be just mostly wick, you know, with a little body to them. This candle might be the best candle that we have if it can get up there this week. The rest of them I would expect to be mostly just shaking out and compressing around 280s, maybe a little bit higher, just slightly above this 275 before a spring action, if it's bullish, okay? GME, on the other hand, so I'd surmise that it may just kind of come back, pop up here, find some support, and then go up. I didn't really talk too highly detailed about it yesterday. I think we just kind of briefly looked at it, and I don't want to go too crazy on it because this is mostly about AMC, but I was like, yeah, I mean, sure. If it holds here, it just goes up again. It's the same deal. I think you're going to have kind of a so-so couple weeks, and then going into early May at the earliest, I think, maybe that week of May 5th, I think you have a possibility that that's going to be going on up quite high. It should be heading up towards 32. And then after that point, we're going to have to wait and see. The rest of that's a lot of speculation. So, yeah, Tesla, do I dare look? So Tesla is a very interesting one because it actually looks a lot like what, to some degree, like what I would expect AMC's structure to look like. So this is one that I was watching really carefully, and I was very curious because I really wanted it to make another bottom. I know it sounds weird, and it's not because of like a fear of missing out or something. I don't really care if I don't get the trade, but it's because this setup looks identical to the setup that we always look at, and it's a super easy setup if it works. The first part of the setup is almost always the same, which is you usually get a drop. So if it drops in the morning, I'd be very happy. I know it sounds weird, but if this drops, I'd be very, very happy because that actually would be far better than just kind of staying here and going up. This bottom was really weird. It was like a bowl, and I don't like that at all. I don't think it's made the proper backup, is what I'm trying to say. So if it makes a really sharp bottom, all right, and it could happen like way later, I guess that's possible. You know, it could happen like over here. If it makes a really sharp bottom at some point, I'm going to be pretty bullish about it because like I said, this is basically like the same setup that we always look at for AMC. Isn't it look pretty much identical? You guys are like, yeah, kind of does. In fact, if you look at it on the big picture, this is kind of scary. Not to like freak anyone out about Tesla, but if you look at it on the big picture, this overall setup also has that kind of vibe of like the double cat ear business. And I think it was like the 2 hour or something. I looked at it earlier and I was like, yeah, it's there. This is very much like the same concept, right? Of this creek cross walk down. And it's certainly where it needs to be in regards to that. But I do have concerns on the big picture about what that means, because this is like a weakness right here. It's not a spring, which doesn't really make sense. Unless I'm misreading it and that's a spring. I don't know. It's possible. And then it creek jumps. So what I was thinking is like the only way to really qualify Tesla is if it gets above 259, 260. If it gets above 259, 260, it's probably going to go all the way to 320. Like fairly rapidly. There's a really critical level here from February. And it seems like a kind of a crazy move, maybe at first. Once you see it, you're like, oh, okay. Because this would be like a breakout. If this is like a spring and a retest, and then this is the creek, and this creek is just this big widening, then the widening itself would have a breakout, have to have a breakout like here around the end of April, probably. And then it would probably just melt up, go into like a quick SOS, and then it would go up. There's another creek coming down that it could bonk its head on, but again, I think that might even be part of this, is like the SOS itself might actually have that interaction, and then it takes off a little later. I don't want to say that that's one-to-one with what's going to happen, but I had looked at SPY and all them, and they mostly have correlation that leads back to March 4th area, which is right here, not before then, but certainly like the walk downs began in January and February. And for Tesla, I think the end of February one is a pretty big deal because it was the main, you can see right here, it was the main level. It hasn't been checked. So is this like a long-term bottom? Probably not. But it could be one that helps to pick it back up. Now, the biggest issue that I have with this chart right now is that little middle guy. This really bothers me because it came down really low here. Again, as a widening, who cares, right? The breakout target for the widening is really just coming back up towards 298. That makes me wonder if it does something like this where it comes up high and then distributes again later. So it's possible this could still go up even if this is bearish, but there is a clear sign of weakness. And so part of me is like, all right, where are they targeting? You know, what's the low? I think it's 200. It's pretty straightforward. I don't think there's a whole lot of reason to be controversial about Tesla beyond what they've already got. 200 was a level that was clearly checked and tested at one point. It hasn't been in a long time. So I was like, yeah, probably 200. It seems that's where most of these weaknesses and stuff are pointing. If it's going to hike itself up going into May and then drop, this is how I would do it. I would not break out. I would literally just do like a UTAD where I bring it back up and then I sell it down again. And then I'd have some kind of probably a longer term walk down with like an LSPY and a drop. Why didn't that already happen? I mean, it looks like the same thing that's already happened. It could be. Certainly you could see a drop there, but there's a lot here that's just not accounted for. And I always talk about that on the wave structure. If it's just missing, it's just missing. It's just not there, you know? So one of the things I would note is that when you look back at this and you're kind of observing where that walk down is, there's not that many points of interest on here. You don't have to do a whole lot. You don't have to even know that much about the wave stuff. You're really just looking at the breakdown and then the cat ear cross. There's only two spots that are interesting. That's it. And those are the only two lines that really make a huge difference in this particular kind of structure for upside. Because those are the bullish directional markers. There are others, like you can look at this guy, but you get into some other territory when you look at that. Okay, so what, Booksy? Well, those particular setups, again, like I said, they're pretty easy to read. And you can see like the correlation between that and the original build out has some really clear and evident targets at 285, which is the top, 300, and then again up near 320s, depending on how you decide you want to mark it up. But I'm like, all right, this is pretty straightforward. There's not that much here that's very controversial, in my opinion. And even this guy, I think this is the one I'd probably default to. Looks like it's trying to target this around May 5th, this 293 area. Because this is ultimately like support, 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 although there was a weakness. Drop, resistance, resistance, resistance. That's the big one. These are the most accelerant ones. I don't think they're as likely, but they could happen. And that's the ones that would take you way up. That was what I was talking about in the beginning. This is the big one right here. So how this normally would go is that this would drop back down. It could make another low. It doesn't really matter. But once it drops back down, it hits like a hard bottom. Then it jumps the creek. The creek jump itself could take time. I mean, it could take until Friday. I mean, Google, I don't know if Google will lift Tesla at all. It could. But it could take until Friday. But then you'd have like a walkout, and this would eventually come back up to this level at 253. Probably would do it by the second one. And then you'd have, if it's going to go, you'd have like a breakout right here. And that's the kind of the place where I said, I don't really think you can confirm upside until there. The reason is that if this has like another sign of weakness or something like that, or it's like particularly bad, you technically could distribute here if it doesn't cross up. Then it's just a big cat ear. See how easy that was? Now it's down. All of a sudden, it's going back towards 200 very rapidly. It's actually, I know it seems stressful because you're like, well, that's a huge change. Yeah, but that's a really easy to read point. Like, it almost always comes back up to the top. This almost always happens where it comes back up, no matter if it's distributive or not. Right? The rest of it is really just a question of whether it's bullish or bearish once it gets there. Simple. That's the motion right there. And then it just looks like a cat ear, right? Well, yeah, it does. And on RSI, it would probably look much the same. You'd have like an ear 1, and you'd have like a shallow middle, and then you'd have an ear 2, and then it would dump. And finally go like really low. And that'd be it. So as I was saying, it's a really easy one to read because the targets are pretty straightforward when this happens. So I'm pretty excited about it, but it is missing like that bump here. Should have some kind of a jump and then a backup. Like I said, it could be above it, but it needs to be there. If it goes way up high, then it needs to come back down, I think, into Thursday. So we'll see what happens in after hours, because that needs to happen no matter what, in my opinion. If it takes a really long time, I wouldn't know what's going on. So where's the buy-in, Booksy? I'll tell you, if this is a bullish trade, the buy-in is on this particular bottom. It should do what we're expecting AMC to do. But it won't be maybe not as obvious, okay? Because it's a smaller section of a chart. But what would be expected is that this would essentially do the same thing. So you have some kind of a spike, and if it makes a higher low here and then advances again over whatever creek is next up, then it's very bullish. It's likely going to remain bullish. And I think if at that point you see it come up top, you can make a pretty informed decision. Hopefully. Right now it's kind of just holding on to nothing. I don't know. It could easily pull back in extended hours today, so I don't really like it. I didn't buy it. I told the chat in the Discord if it has a sharp drop, I might consider it because I think it's a good entry if it does. But I'm not playing earnings. There's no idea what's going to happen. Google's up next on Thursday, Alphabet, so that'll be interesting. But yeah, so if this has a push up, it just needs to kind of come down and make a higher low. And if it comes down and makes a higher low and then it breaks out again, we'd be in really good shape for bigger upside. But anyways, it's very straightforward, actually. It kind of did this before too. So you have another example right here. This one's a little weird because the cat ears are so ridiculously high, but it did the same thing right there. You can see that higher low and then it pushes out. That's the same structure. It's a bullish setup if it works in your favor, right? And the big thing here was like this jump and then this triangulation right here to the top. Really, it's where that ledge is. The ledge is like right there. So we have the same exact setup right now, potentially. That's why I'm saying, like, if it goes, it could be really, really, really strong. It could end up pushing up higher than most people expect. I don't know, Booksy. I can expect a lot. Yeah, I know. It may even go from like way down here. Like I've got it kind of slowly walking out, but last time it did it, it just kind of took off. See, if it opened really low, especially if there's a gap, man, I'd be looking for that bottom tomorrow morning. Because I think it's very likely if this holds a higher low and then breaks out, it could just go. That's sort of what happened here. It went really fast, so. And then just all of a sudden, it's like way up here, you know. And you're like, what happened? Science. I'm just kidding. Science happened. Don't be a dummy, Booksy. So yeah, there's a longer and a shorter version of this, I guess. But the main thing is that bottom. I really want to see it. I think if we get it, it's good. Tesla earnings have a way of kind of rocking the boat, so we'll see. I don't like talk about ChargePoint almost at all anymore, but ChargePoint's in a place where, ooh, man, that was close. All right, so this is a weekly chart, and I know I don't talk about this very often, so you guys are like, what? ChargePoint. This is bullish divergent on the weekly now for quite a long time, since November 2023 to now, which is like a long time, okay? And it's been like that for a while. Now, the last time it did something like this, it ended up being really bad because it was divergent and then it ultimately ended up crashing after the fact. That was way over here. However, this is a different time and a different place, and I think when you look at the overall picture and the volume here, it's crazy how much this is sold off. It's come beneath $1, blah, 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 blah. The company has done nothing but kind of improve their finances. You could argue they're still not fundamentally the best. But I gotta say, like, this chart looks pretty sassy, like pretty spicy to me. It looks good. I mean, just look at it. Yeah, there could be another drop. I see that. But I mean, like, the rest of this, I'm like, oh, it already jumped the creek. Like, it's ready to go, you know? It looks really strong to me. And this divergence is on a creek jump. Where does the divergence start? It started at $3.80. And I genuinely think that that's a wave that could complete. It's kind of a crazy one, but it's there. And it definitely looks possible that that could actually break out into June and go to 360. So if you're looking to diversify, this is one that you may want to keep on your radar. That's a huge, huge, huge move. It doesn't seem like that big, maybe just glancing at it, but that's like over 550% or something. It's crazy high. It's squeeze season, I think. So yeah, I'm looking at this one, potential June runner as well. It is very low. It is kind of a dangerous play, sure, I guess. Because, you know, there's always risks associated with any stock. And there's other things here that I'm like, oh, well, that's weird, you know, this or that. But on the whole, this could be a very, very bullish signal. On the smaller time frame, the target trajectories are not like ridiculously high. And it did look like it was trying to break out today, and it pulled way back down and like compressed. It may need to work itself out a little bit more. If you want to wait for a confirmation, I would tell you to wait until it gets right above 66 cents, because that's the level that it's going to have the most issues with. If it can get above 66 cents and hold, it should just go all the way up to, in my opinion, it's probably going to go all the way like 90. So even that by itself is a really good trade. But then I think there's a definite possibility this thing could be getting ready then to launch going into May. And it'd probably have another nasty sell down here and there. But I honestly think this thing could be flying. There's 122. That's another target. And 169 is another one. And then ultimately, it could totally be going all the way. If this squeezes is real, it could easily be going all the way up to the top here. One of the things I like to look for when I look at stuff like this is where is the middle. So if I think that this could go up to like 350, then I try to drag it down and see if like that's low enough and does it make sense as a middle. And right now I would say, yeah, it does. This is the middle right here. So I'm always like asking the question, like, where's the center mark for this thing? So it could go a little lower, sure. I mean, it's possible, but that certainly looks correct to me as a potential middle. And that's always a big deal, I think, in these motions, because you'll see that the even it has to push up higher, right, eventually in order to kind of rebound, if it's ever going to rebound. That's a given. Obviously, that needs to happen. But then where does that where does that exist on this whole schematic? That's like the center of that massive downtrend. It's like right here. So right in that pocket where there's like a big downtrend, that's the middle of the downtrend. We've busted below it, which gives me evidence that it could overextend. It could even go beyond the top here, potentially, a little bit. But it certainly looks in the right spot. That middle is like triangulated correctly. Well, what if it doesn't go right now? July. Oh no, another one. Well, I mean, again, it is triangulated correctly, but sure, like this could take a lot longer. I mean, a stronger triangulation, if it does make a lower low, this changes, but a stronger triangulation might be July. So that does where it actually hits it. But I'm just saying, like, eyeballing it looks pretty good. And regardless, if you're interested in it and you think it might run anyways, then it doesn't really matter. You're probably not going to do options on this thing when it's only trading at 60 cents per, you know. It's not really a huge buy-in, is it? So you could do options, but I don't think that'd be very safe. If you did one, you might want to pick one that's like way out, like way out there. But yeah, it looks like a lot, but I actually think it's just sort of like an inversion on this wave right here. It doesn't really strike me as particularly odd, especially coming up to at least 150. Like if we could at the very least say, well, this is like a wave here, it's just missing like a hit. It's already testing the lows, which did happen. I mean, you can see right there that motion. Oh, that is really symmetrical. So at the very least, coming up to like 130, that middle 50% retracement seems highly probable. Right there. I'm probably not going to look at anything else. I think we've been going long enough. So, have we? Yes. So we'll see what happens with Tesla. That's going to some degree, it's going to affect the S&P 500. I traded up on the S&P 500 today. I'm not particularly convinced that it's going to continue just yet on SPY. I was right. I traded up to here and I let it go. I thought it might come back down and retest, and it did. I didn't see the retest. Otherwise, I might have grabbed it. It looks a little sort of off, but I think it's a slightly too low. Anyways, so is it possible that this is setting up like I thought it was, is doing it higher? Maybe. I don't know why you would need an early breakout, but if they're going to do like a double whammy with Tesla and Google, then you might have like a Tesla pump tomorrow or a Tesla dump tomorrow. And actually either one's fine because the dump would be like, again, that sharp bottom. Yeah, it never came back down. The dump would be nice. I wouldn't mind that. If it came back down, that'd probably make sense to me too as a cat ear. 1 and then 2, 3, but it doesn't look particularly bearish to me. It looks okay. It closed in a good spot. I feel like it could go either way. But yeah, it'd be nice if it came back down. Again, if this came back down, I would be very, very bullish going into the rest of the week. Like extremely bullish. It already jumped its creek, so maybe there's an argument that it doesn't come back that low or just doesn't come back at all. It's up, if it's up in after hours, so I guess it could just take off. Or like we were saying with Tesla, if this ends up pumping up and then comes back down, that could be a similar motion here. I would expect it to hit probably around 538 if that happens, and then come back down. Yeah, that would be a solid rotation, and then it would do it again. It's kind of a weird setup if it does that. I'd have to redraw it. Yeah, I don't know. What would happen there? Well, that seems right. It just has to come back and check that. And then this is the big breakout right here. But Google is not till Thursday. So that'd be like an early breakout. I don't know, man. It's kind of the same deal. It's like missing pieces. So for whatever reason, I guess there's a gap up tomorrow. I'll reevaluate it. I kind of want it to go down. That sounds horrible. And it's not about missing out. It's just I think it'd be a stronger move. But if it gapped up, then we really just have to come back down. And then we could hold here. Google earnings is not till Thursday. I mean, I guess it could hike up in anticipation of it and just be up there already. Whatever. We'll have to check that one out tomorrow because SPY might be a really good opportunity as well. The reason I didn't love this bottom, I traded it. I made about 100% trade, which is a great trade. I'm not complaining about it. I didn't trade a lot, so I'm not particularly thrilled that I didn't trade a lot. But the reason that I didn't really love it was because this bottom is just super soft, and I don't like that kind of bottom to trade. I like the V-shaped bottom. These feel very distribution-like to me because almost always they are distribution-like. There are some circumstances where they're not, but more often than not, if it's like that kind of bottom, I'm usually like very skeptical. So there's like no pullback at all. It just kind of curls up and then goes. Very weird. It's not a normal type bottom. So I would love to see it have like a sharp correction and then really have a firm bottom motion. So if we went like up here and then dumped this way, going into like Thursday, I think I'd be pretty darn bullish, especially if it gets down to like here. That to me would be a great buy-in opportunity. Earnings season is going to be a prop for the market, by the way. I think most of you would probably agree with that. I don't think it's going to be long-term bullish, but I do think it's going to prop the market up. So what we're going to see, in my opinion, is that we're going to see that push towards, I know it's complicated. These charts are a mess, but I think we're going to see that push towards the 564 to 575 on SPY. I'm just kind of waiting for that really want this to like consolidate right here. If it does that, I think this is going to be like super strong. May even get like a Friday explosive move, Friday into Monday. That would be really good. That would be like a real kind of, walk away squeeze type deal. But, as I've done anything, there's a lot of possibility here. So we'll see. I have not looked at the small caps in a while. Yeah, part of me doesn't really care that much. I'm so tired of IWM. I tried trading it, and I was successful in some of my trades, but like looking back, it's just one of those that I've traded enough at this point. I'm like, I feel like there's not really been enough good trades to kind of warrant any real devotion to it, I guess. I don't feel very devoted to it. And in the bear market, it just really wrecked me. Like, I just could not trade it. So I just kind of was like, all right, well, it's kind of done with that then. Yeah, if this comes back down tomorrow into Thursday or Friday, I'm going to be super bullish for next week. If it keeps kind of stressing upward, I'm not so sure. Because honestly, like this has already made a SOW, I think, right here. So I think it's going to come back down and retest lows. It's really more a question of like how high does it go before that happens. I think it's very likely it's going to come back down to these lows. So it's more a question of, again, catching a move while you can and then like letting it go, I think is a better strategy right now. And I get the feeling that by May, about mid-May, we're going to be kind of as high as we're going to be. So I think it'll run ahead of AMC and stuff, and then right around mid-May somewhere, we're probably going to be like wherever we're going to be, depending on how this sets up. Could be very high. Consolidating right here or something. So AMC is in squeeze mode, in my opinion. But I think that the big question that I have, and I've already kind of talked about it a lot today, I'm just going to finish with this. The big question that I have is really about how far does it go, this particular pump? And then from that point forward, how long does it take to take off again? I don't think there's much else to talk about here. Like, it seems really unlikely to me that it only goes to like 330. I'd said that before, like, oh, some of these targets are really low. They only hit like 330. I've changed my mind about it a lot because that doesn't give you enough buy-in. I do think you could get enough buy-in if it pumped to like 4 or even 4 plus, like up to 5. I think people would think it's going for sure, like last time. And a lot of folks would not be buying until it broke out above like 335 and starts making like headlines, right? So it would be like right around here after like an 11% day when it's at 320 and it keeps having like a 10% day and then it has like a 20% day or something. People are like, whoa, it's going. But according to its own iteration, it really doesn't need to get up there any higher than 4. And I looked at it very, very, very carefully. Like as much as I could, I tried to stress like, all right, here's where it was, that this drop down occurred, where this really sets up. And I'm not convinced it needs to go beyond 4. I do think it's possible that it goes up to $5. That gap is strange. And it does signify a 50-50 later, which is really important. That's why I left it on the chart, because in the long term, that could end up being a huge blessing to have that on the chart, because if we know where it goes down to a low, let's say it hits a low at like 215 or 210 or something like that, right? Well, if it ends up being the spring, my opinion is that that level at 5 ends up being the 50-50. And I think it is going to end up telling you roughly how high that thing's going to go. And I think it's very critical. So if it goes down to like 215, it goes up to like 1162. Not high enough, Booksy. Well, maybe you want the deeper spring. Why is that the level? It could be another level, but usually that's where it is. There's some kind of a drop ledge. There's only two here. One's at like 4, which is kind of low, you know, and the other's right there. I mean, and that $5 area is like the center of liquidity. So it does make sense that that would be the most likely place. If it goes down to 180, then I think it could be 1367, which is a little more accurate, right? What about an LPS? You can't do that with an LPS. No, you really can't. I will say this, you know, for as long as we've talked about this, I'm kind of amazed, because I feel like I've done this so many times, but I'm still kind of amazed at how tight this always ends up being. There's never like really a situation that looks way out there bonkers, which is kind of great. And we've had some really fortunate exceptions to that, which haven't really always led, unfortunate I should say, that haven't always led to like the best. But for the most part, like this has been very consistent. And right now, the way this is triangulated in order to like press forward, and again, just kind of looking at the overall direction here of this movement, everything's pointing towards this August, and that's a 2-year cycle. I mean, it's really tight. It's what you would expect to like August 29th. And that's very, very good, because that is exactly what we see in the 2020 build out. The main controversy, I suppose, if there is one, is that concept of like going like at a breakneck speed right now and like consolidating into that point later, versus kind of waiting a bit or going into a spring and having a much shorter route of it. And I've talked about this extensively before, but I'm just kind of pointing it out again, that when you look at the big picture here, a lot of this feels way out there, like left field kind of stuff, but it's really not complicated. This actually is like a perfect 2-year cycle. Like it goes from May 19th through like May 19th, basically. This is like May 14th or 17th. Like it's super straightforward. Like it seems really daunting because you're like, oh no, it's like all this crazy stuff. It's not though. It's like really, really, really simple. It's a full 2-year cycle, right? From one date to the next. And I find that to be kind of intriguing, because I'm like, well, that's interesting. I wonder why it's so easy, you know? It's like, it seemed like you wouldn't want to do that. But honestly, it's exactly the same in this time frame as well. Like when we drop into this zone, if you look at where that gap is, it's no different. Even the arc itself looks pretty much the same. It's just a scoop, you know, it's scooping up ice cream or something. It's hard to say where that is. I think it's on the 6th of, I say August, but it's really more like, depends on how you measure it. If you measure it to like the actual split date, it's in August. But if you measure it to that drop in, that's like September 6th. That's where it drops into this range. To September 6th, where it should be. This is August 28th. September 6th, 5th, whatever. It's not going to be like perfect. But like, isn't that exactly where this is pointing? Yes, it is. So like the time it took to enter and exit here was a 2-year cycle. And all we're really missing at this particular point is where is that up thrust, you know? this is where things, I guess, could get kind of dicey for some people. I think when I was looking at this before, I kind of thought, well, that might be it, you know. Weirdly, the middle here doesn't really add up. So however you're supposed to make this arc, like you could go to the middle, but then that would suggest this thing rockets to like $7 or something if you're just using arcs, which doesn't really add up. It doesn't really make a lot of sense. What makes more sense is that it kind of respects multiple things. So like this clearly respects at the same time here, like all of this is building out around the same mark. And then the extension here is where you see that evidence that it's still considering that arc. But that's it. I don't know if what we have right now gives us enough information. And if it does, I haven't really been able to pinpoint it. I wish I was smarter, but I'm not. Like you might suggest it's here, which is very low. I mean, that kind of respects the top here, and it does respect these guys here. That would suggest that this thing goes up to like 536, like the gap fill, which I would buy. I mean, I believe that. I don't think I'm going to trade it, but I would believe that it could do that. That was where that gap was up here. So it could do, it's possible. It's just really high. Like that's so far. I mean, it would be kind of like this thing where it has this massive pump and then retraces like 70% or something like that. But I find that one to be tough to swallow. I guess it'd be hard for me to, like, I don't even know how you judge that. That's so ridiculously high. That's how a lot of people felt, though. I mean, Stockfather talked about this and said, I don't know why it came this high. And I was saying, well, I thought it came that high because of the fact that it left this behind. I don't know if it's really leaving anything behind here to say it comes back up. I think the gap is like at like 520 or something. Where did it close that day? 520. So maybe that would be a really wild ride if we hit like 520 and then dropped all the way back through to like 3 something. I guess it would have to make sense. So we could look at like a retracement. Yeah, all right. I mean, 350 is a 618 there. So, and the 786 goes down to 308. So it's not like way out there. I could be right. I mean, I guess that could be right. What happened here was kind of like that. It was kind of crazy. And it did hike the on-balance volume like crazy. And then, see, it came down to, and it wrapped around the 618 pretty neatly from where it took off. If you go to the bottom, it's a bit different, but it's the same thing. The range is basically 618 to 618. It's that golden pocket right there. So certainly a possibility that it goes all the way to 5. I didn't really give it much thought, to be frank. I was like, it might happen, but so like it could hit 520. I'll tell you this much: if it hits 520, then we probably know where our arc is, and we're probably in the right spot, because I think that's about right. And I think we're correct to assume this is going to drop and then, or try to drop, and then we'll see what happens. Maybe it won't go for that low spring after all. 520 might be enough to get a big sell-off going when it comes back down. Man, it's really, really nice. It really is in the right spot. That makes me wonder, you know. Just chills out right here at 520 in May. Or it's going to be like 350 in May, but it goes to 5 first. That would cause a lot of craziness. Because that's a huge move. That's like The other one was big. That's 100%. The other one was still pretty big if you count like all things considered. So that's almost like too far. And then the wave, I didn't even keep the wave cross on here. The wave cross would be where it returns when it fails. Oh, that's right in the right spot. This thing might go to 520, guys. Yeah, it may. I didn't use the cross because I was not trying to do that on this chart. They didn't want to make this like another crazy messy chart. So I didn't want to add more stuff. But the cross is right there. So this is like the perfect place to camp because you haven't jumped over this wave middle. So it's like a overextension. It's like a 50-50 around the cross. So if you go to this, so this implies that, yeah, it could be as low as 252 by the time it goes. But it is already, look, it's already like right in the middle. Right there is the 50%. It's a 360. Which of course makes some sense because we just measured it. I guess I could have just taken this and dragged it back to the bottom. Yeah, that's the 50% right there. This is like perfect. Yeah, I was kind of disappointed. You know, I did put Squeeze in the title, but I also thought like we'd have people in here who are a little bit more optimistic. Now it's come down so far, but there's more of the same. For a lot of folks, they just don't want to hear it anymore. They're sick of this play. I get it. I mean, I'm kind of in the same boat, but I don't know, man. If I'm going to get my kiddo a Switch 2, I got to make some good trades. Thing's expensive. Thing's expensive, man. Of course, my investment in Nintendo stock has pretty much paid it off. It's earned me over 500 or 600 in the last like 6 or so years, I guess. I don't know. I don't put that much into it, but it's grown a lot. They pay a dividend too. I like companies that are old and that consistently do pretty well. And I'm trying to do better with the dividend stuff. I really think that's the future of, like, that's the future, is to get good stocks. That could be correct. If this thing hits $5, man, I'm going to be flipping out. It almost seems like too far. I guess I keep saying that, but it's like, that just seems really too far. No kidding. That's the same marker. Pressed up. Yeah, that's the same marker. Oh, shoot, dude. I think this thing might be going back to 520. Are you saying it could hit 12? I'm saying it could hit 5 as early as May. But I do think that if you're talking about September, that's really tight. I would have to just advise to be cautious because obviously like September 6th is the 2-year cycle. But yeah, it's very likely going to come back to 12 in 2 years. Like a 2-year accumulation cycle should give you enough ammunition to get back there from where we are now. And just for evidence of that, like go back and look at the original squeeze. That was like 10 months and some change, and it moved really far. So that was a 2-year cycle as well. We've spent a lot more time in some ways on the downward motion than we have on the bottom, but it's very similar. Yeah, I guess there's one other like setup that could kind of throw a wrench into some people's plans. I didn't really mention it, but there is a concept of like mirroring that could happen. and I'm not a big fan of this one, but I guess it's possible, so we should mention it. Like, for example, if it hit like a spring early and it didn't have some kind of dramatic spring, but it was just kind of a gentle spring, or it had a quick pump here and then it dropped down to a spring and then it ran. One thing about 5 that is curious to me, not just because of where that is, based on like what we just looked at with that wave, is this. It goes back to what could be perceived as kind of a mirroring. And I don't know exactly how to prove any of that, because I feel that that's a bit speculative. It is true that a lot of times the way you move out of a bottom is very similar to the way you move in, especially in light of trajectory and like pacing. But I've made an argument before that I think that this first move might be more like this one, because we've already traded so much of this range. I don't know why we would do it again. So I'm thinking that the first move is going to be like this big move, and the second move will actually be kind of a mirror of this one and go up a lot slower. So the first one would be like this really dramatic move, and then the second would be a lot more like chop, chop, chop up. There's a lot of reasons that I suspect that might happen, but the biggest one is just, again, that this is now like kind of a gap zone, and we haven't really traded it since 2020. I argued a long time ago that if you use the combo chart from Ape AMC, it traded like just below like that $2 value just below. So I think that area might be kind of omitted, and we might just blaze through it. Like the area from like, it's not $2 anymore, but it's like 24 up to 34 might be omitted from that. But I think the rest of it may need to be traded. And there's certainly evidence that you would get stopped at like 2050, for example. And this is a weird calculation, but I actually think that if the first move happens in July, which is my suspicion, it'll be over by the end of July. But I think you're going to build out a second move going into October, which is kind of backwards because the market usually doesn't do well around that time of the year. But we'd basically be entering like a more bearish time for like a month or two before January. And there's a reason for that, and it goes back to this early drop, but it's muddled by it's very muddled because this isn't actually on the chart anymore, but this is a pretty common way that I've seen a lot of institutions come back to gap fill. If there's a bull trajectory, and there is one here, there's like a bull trend before a gap down, and it gaps back through that area that they'd already traded. If you pay attention, every now and then that gap and that trend, that last bull trend, end up really closely triangulating where you do come back later. I don't know how to prove that other than to just say that I have seen it more than a few times, and it has been fairly reliable in some cases for estimating where that might come back. When I did this with the shift value, it came out to be $20.50, like exactly, which I thought was really strange because it's a really weird number. You remember how I was talking about like how I did this calculation, right? It's 46.41. That's where the gap was. It's a very strange number. And that calculation that I did was it's 2.2636. So it's essentially a divisible number, or it's a 226% shift, or whatever you want to call it, okay? But like that number, when you multiply or you divide it, into 46.41 gives you exactly $20.50. And when I put $20.50 on the chart, I was like, oh, so if that's shifted, that's actually the center. That's really crazy because, and you guys who were with me that day that we did that, I mean, I guess it was way back right after that offering was made in December. I think that's bonkers. So that shift value represents like the center mark here. Anyways, so I did it earlier today, and I did use anchors when I did it, and it marked it off as October that it would hit that line. But that gap fill isn't exactly the same as it used to be because of the shift. Or is it? There is a gap there. So oddly, there is a gap there. And it's not only a gap, but it's this really important historical liquidity center. And it is at 2050, and it is right here. And you can see right there, the day before, I mean, there's like a double split thing that happens, right? It's like between these two splits, this comes down and it camps right below that 2050. And then there's a gap down from there, at like right at like 1960 or something like that. So there's actually a little tiny gap up there at like 2250. But that area right here is of moderate importance. There's a double gap right there. And until you get to the top, right, the tippy top, or unless you look back at like the 1380 mark, there's no other gaps. So it's kind of fascinating to me. So I was like, that's really interesting, because that coordinates to about October, which is right, because you would expect to be leaving here on September 6th and doing like an SOS. So the next motion should be up. And it gives us a pretty solid estimation for where that target might be walking out of there. And the timing of it's actually very close to 1-to-1 with the timing of this, which is very cool. So there's a lot of interesting stuff that I didn't talk about in the bigger portion. But then I was thinking, probably this has to back up. And I wonder if this is like a sluggish period going into December, and we get that Santa rally into January. And that's really where probably a lot of that pickup happens. But like I said, I talked about this before. I think that the overall picture here is this 2-year cycle. Once that's done, we would see this as part of that 2-year cycle, the breakup and then the reaccumulation here. And is that in the right spot? Again, yes, it is. Like, this is where that macro downtrend is. So it's exactly where it needs to be. Like, everything is pretty much exactly correct. So I know that I've said it myself. I don't pretend to know the future. I really don't. But if this is used, this was extremely telegraphed, like way in advance, because this is some of the measuring that I did, again, like 2 years ago. So it was very telegraphed if this ends up happening. In a good way. And we should be able to capitalize on it. But I do think the rest of this might be a bit more choppy. So I'm looking at it coming back up to near 50, and that's about it. But I think that's by 2026. So that guy that said he won't come back till 2026, he would have missed actually the move. And it is roughly the same exact length as this first move. It actually generates quite a nice channel as well, and I think I've mentioned that previously. But we can always do it again, just for kicks before we sign off here. My kiddo's going to be home in like a minute, banging on the door. But yeah, there's actually a pretty solid trend right here. If you go to the original opening price and you go to where that COVID drop was, if you ignore the heightened push over the top, it's possible, again, that we see something like that isn't quite right here, and I might just kind of getting a little bit off. Maybe the angle's a little wrong, something like that. I'm actually using the peak where it broke down. I think that this consolidation was evidence of that marker, and I don't think that it's actually at the top. But if you do measure to the top, you can see like this takes it up to like the middle being around here. Doesn't really interact with anything else. If you take it down to where that breakdown happened, it looks pretty tight. Like it looks like it mattered here. Like this was the center. What's interesting is that is right where we would see this intersection again. There's the middle right there. It also is right there, which is right where the gap is. Same thing at 2050, right around the same spot. It's essentially that little split between the splits. It's right there. It's also like, again, would be coordinating with that October time frame as a result, as like a triangulation between 970 and 20, which is a huge increase if you think about it. But then look at this picture right here that we drew of what could potentially happen in the breakout. And it's like right where it needs to be. You know, I have it a little bit low. I have it like below it, but it could come right above it and pop up. And there you go. And then when you look at the big picture zoomed out, look at where the intersection now is at the higher gap fill. And it's right there. I'm not 1,000% sure about the way it gets there, you know. Those are things I would be happy to be like, sure, it could get there a different way. But I mean, looking at this, I'm like, nah, that seems right. And that's the shifted down wave cross. So don't really have a lot of questions about this. That's why I've been saying February 2026 for like a year. I mean, sure, it could go higher a little bit. Maybe it hits 72 again, just for old time's sake. But I think that you have a very strong chance it's going to camp right here around 48.50 if it does this. It's the same move. It's just offset. And it finishes it. This wave is actually 100% then complete. That's the crazy thing about this is that like if you look at the timing of this wave, there's so much here you could say. I mean, there's obviously like ways to measure this out way longer. And I've talked about the reason that I measured it the way that I did and so on and so forth at different times. I've used like the place that it kind of exits this trade, the place that it crosses the trade, that lands you right in that spot right here. So the wave up, down, and then back up again should land you right around there in like March or April. I've used like the middles of these zones to try to like estimate it. That gives you like a more early approach, like January. You know, there's just not really a lot that you could do wrong here. Almost all of it brackets out to being the end of the year. The worst one, I guess, is this one, which you could say doesn't do anything till 2027. That's the only one I could think of that'd be like really bad. All the others are all in this pocket, this like few month zone. So like I'm pretty excited to see it finish. All right, guys, I got to go. I hope you all have a good day. We'll talk to you tomorrow.